So what will the Federal Reserve policymakers do, and how will traders and investors parse through every single word from Chairman Ben Bernanke in his press conference on Wednesday? Kelly Evans takes the pulse of some Wall Streeters on what to look for from the Fed.
It's the most important Fed meeting since, well, the last Fed meeting. Anyone hoping traders have moved on from their obsession with Federal Reserve policy moves must be sorely disappointed.
Ben Bernanke just has to open his mouth and say hello, and the market's going to move.
See, everyone's looking for the slightest hint the Fed's going to change course.
I think this latest bounce back off the 50-day at 1,600 has definitely been in anticipation of some dovishness from Bernanke tomorrow. If we don't get that, I think we sell off.
What's the one thing the Fed can do or say tomorrow that you think will be a calming presence on the markets?
I don't think there's anything they can say that will be calming.
For weeks now, markets have traded on speculation, rumors, and reports about just what the Fed will decide to do when its two-day meeting concludes tomorrow afternoon. It's been a seesaw ride for Wall Street in the last few weeks. Stocks started selling off on May 22nd when Fed Chair Ben Bernanke said continued improvement in the labor market could prompt the Fed to pull back on stimulus within the next couple of meetings. Then stocks rebounded when the Wall Street Journal last week said the so-called tapering of bond purchases was not in the cards this time around. Yesterday, it was back to selling off when the Financial Times on Monday said the Fed is at least likely to signal that tapering is close.
My own belief is that tapering has begun because I believe jawboning is a function of tapering.
What's telling about the market's jitters on every rumor about the Fed is that it reflects a broader concern in the market that the U.S. recovery still isn't broad-based enough to stand on its own 2 feet. The latest reminders of that: consumer price inflation last month rose just 1.4% from a year earlier. The unemployment rate ticked up to 7.6% in May. Perhaps bond king Bill Gross put it best in this tweet, saying that for today at least, all's quiet on the Eastern Front. But he cautioned Bernanke must be careful to keep it so. For Nightly Business Report, I'm Kelly Evans in New York.